Morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Mitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind Will and I in Market Chameleon. We're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. There's the disclaimer.
Excellent.
And I am going to share my screen. While I'm doing that, if anyone's joined us for the first time today, Will and I would do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into that live chat on YouTube. Will's watching it. He'll read it back to me. And to give you guys a couple minutes to put those questions in, we'll start out taking a look at the pre-market report to see if we could get insights, what's trading in a pre-market hours, and then we'll move on to the questions. All right. So pre-market report, these are stocks that are trading in a pre-market hours. Up top, we start out, we have this calendar view. That does allow you to go back historically to see what happened in a pre-market hours on a historical date. Today, we're on here, January 23rd. And so far, from a high level, this is the summary statistics. We have 525 stocks trading higher in the pre-market, 263 stocks trading lower. As far as volume goes, we've got 220 million shares trading higher, 35 million shares trading lower. And if we convert that volume to dollar value, we have $2.8 billion worth of stock trading higher on up volume versus $687 million worth of stock trading on down volume. From that perspective, it looks like the pre-market trading is leaning towards the bullish side. Let's look at it from a couple more perspectives, and then we'll take some questions. So now we're going to scroll down, and we have a list of stock symbols that are trading in the pre-market hours. We see the price change, volume, and so forth. We have our most active list, the biggest percentage gainers in the pre-market hours, biggest percentage decliners. We have 139 stocks that made our biggest percentage gainers list, 61 on our decliners. So that also points to a more bullish bias in the pre-market hours. Now, to make this list, we do set certain thresholds, liquidity, price change, and volume, because things in a pre-market can trade very liquid or very low volume. And, any stock that meets our thresholds and it's trading in pre-market hours that's listed on a major U.S. exchange, it can make this list. We see small cap stocks in here, ETFs. There could be a leveraged or an inverse ETF in there, closed-end fund. And to narrow down this list to a smaller group, we could use the filters above. And if you do have a watch list, if you saved watch list to your symbols to a watch list, you could filter by that watch list. We are going to use this filter here in ETF for our example. So when I click on it, you get a drop down menu to select from different ETFs. We're going to choose this one, SPY. That's the S&P 500 ETF. And when we do that, the list below will get filtered by the stocks that are holdings in that particular ETF. So SPY, that will be the S&P 500 constituents. And here we see 21 stocks in the SPY made our biggest percentage gainers list, right? They met certain thresholds. The stocks moved enough to the upside to make our biggest percentage gainers list. We had 6 on the decliners. So that also indicates that the trades in the pre-market hours, traders in the pre-market hours are leaning more towards the bullish side. And I think we do have earnings now coming up. So when we see under these alerts, that E, that stands for an earnings alert. So either yesterday after the market closed or this morning before we opened, these stocks or companies have been releasing their earnings, and then the company or the traders are reacting to that news. So we gave it a couple minutes, Will. I think I'll take questions now if you have them.
No questions popped up. Rob did mention lots of earnings today and for the next couple of weeks. Well, he is asking a question, actually. Netflix may be a good stock to look at with earnings coming up, and the volatility yesterday shown on MC. So I don't know if you want to look at Netflix upcoming earnings.
I mean, we could take a look at Netflix and let's see what's going on. So, it looks like Netflix will be reporting actually today after the market close, right? So it looks like whatever, if you're interested in that earnings in Netflix, then you have today to look at the options or stock, whatever you're doing, but today after the market close. And what we'll do is use this earnings interactive charts and get some insights what tended to happen in Netflix around earnings. Okay. And here we have some summary stats. And we'll start out maybe taking a look at some of them, discussing it, seeing if we could get some insights from here. So with Netflix, the first stat is it's looking at the historical straddle prices right before releasing earnings. So the last snapshot of the day before releasing earnings, how was that straddle tended to price? So when we look at a straddle, right, buying the call, buying the put, the stock has to move by a big enough percentage to cover the cost of both, right, to break even, and goes higher, it'll be profitable. If not, it'll be unprofitable. So where was the straddle price right before earnings? So we're looking at the nearest term option, and on average, if we looked at Netflix history, the straddle priced in an average move of 9.2% up or down, right? So let's click on that. I'm going to click on this, and we're going to come up and see this history. So here is the average straddle, 9.2%. The highest that was priced at the end of the day, 15.6%. The lowest, 5.8%. And the median price is 8.6%. And this little blue guy all the way at the end, this is looking at the most current straddle. So we put them up, day or two or day to go. Where is that straddle price? So yesterday, that straddle was priced at 8.1%. So what does that mean? That if we looked at the straddle yesterday, the premium, right, of the straddle is 8.1%. Historically, right before before, so it still has a day to go, right? We still have all day of trading today. So it could go up or down. We don't know where the options will end up today. You know, the implied volatilities, if they go way higher, then the straddle could be priced way higher. If it goes lower, could be priced lower. If it implied volatility stayed the same, then the straddle will just decay. So we don't know what's going to happen today, but now we have a benchmark to say, okay, well, you know, where you see this dotted line, that's where on average, you know, where and they could vary, right? Like we're looking at the data right now. We're visualizing it. So we could see it's not always 9.2%. Sometimes it's higher, sometimes it's lower. We're looking at the distribution of this data, and it could be higher, it could be lower. And it seems to me like, you know, there's some trends here, like when it's lower, it goes lower for a couple quarters. When it's higher, it goes higher for a couple quarters. But you know, it looks, you know, to me that there's, you know, a wide range, 15.6% to 5.8%. That's the historical range. Right now we're at 8.1%. And so we're below the average, we're below the median, and we're closer to the low than the high for sure, right? So just looking at that, initially you'll say, okay, you know, based on this data, it looks like the straddle is not, you know, priced, you know, at an extreme high level. Just, you know, ignoring what the stock may or may not do, we're just looking at where is the straddle priced in relative terms. So even with the data go, we're at 8.1%. And maybe implied vols we'll see today could make that straddle more expensive. Well, we don't know, but we could see even with the data go, it looks more to the inexpensive side. So let's do a couple more things. What if we narrowed this data down just for the fourth quarter? Because this is looking at every quarter, right? This fourth quarter, but we could see we have all the quarters here lined up. So what if we just looked at the fourth quarter, right? So let's do this. I'm going to filter just for fourth quarter, and now it's going to recalculate everything. And we have less observations, obviously, because we took out first, second, and third quarter data. Now we're only looking at historical fourth quarter, which is, you know, once a year. You can see here. And how does that straddle look like? Well, the average 9.1%. You know, so we're still above it. The high-low range, you know, now it's more narrow. We have less data, 13.2%, 6.4% on the low range. And the median is 8.5%. So we're right now at 8.1%. And if, you know, you're and some people do just look at the pre-market pre-earning straddle. You know, some people just play the implied volatility run up to earnings. You know, forget about the earnings. Like, you know, this is up to earnings. We're not talking about what the stock may or may not do. We're not, you know, we're not talking about, you know, what the straddle will be after earnings. We're just looking at the implied volatility run up to the end of the day. So that's what we're kind of looking at here. And at this point, it looks like, you know, yesterday's close at 8.1% seemed like it was on the lower range. So if you're looking at the, you know, run up, implied volatility, run up into the earnings, that was what you're looking at. It looks like we're on the lower. Not certainly, it doesn't mean we can't, you know, even the historical range, you know, we've seen it at 6.4% over here, January 21st in 2021. But it's only if you feel that, heading into this earnings, we might see a rush of traders coming in to buy options, for protection or playing the straddle. And if you feel that way, and this is a good reference or benchmark to see, well, where are we at versus historical? Like, let's just see where it ended up last year. So here last year, it was at 8.1, right? So we're right up, yesterday it was at 8.1, and last year the straddle also closed at 8.1 right before earnings. And that also indicates, well, even if you held it for one day, just using that, you're looking at a break even if we're right at 8.1. In other words, there was no decay from one day to the next. There's no decay so maybe, you potentially have a opportunity to sell it higher, but over here, it didn't look, if we just compared it to last year's 8.1, or previous year closed at 8.9. Let's look at just the last quarter straddle. So I'm going to unfilter this fourth quarter. Let's look at all of them. So this is looking at so we're well, right here we're at 8.1. So let's look at October. So October, the implied straddle move was 8.6%, 8.7% before that, 8.8%. So you could see that, they're all a little bit higher. Now we're dropped it to 8.1%. So, well, just to recap, what do we do here? We looked at the pre-earnings straddle values, right? Just pre-earnings straddle values and the run-up in that straddle up to the earnings, up like right up to the close before announcement. That's what we're looking at. All right. And so far, that looks like, it's been priced as of yesterday's close towards below average, towards the lower end of the range. So let's go back to the summary. Summary page here. What about the actual move? All right, so now we have the straddle. What if we wanted to compare the straddle price versus how did the stock Netflix actually move after announcing earnings? So, close today after the market, they'll announce earnings. What will be the change from today's close to tomorrow's closes? We don't know, right? But that's what we're looking at. Well, what is historically the one-day move after reporting earnings? So here, we come down to here. These are the absolute averages. So we see that the earnings was 9.7. So let's click on that. And here are the historical moves in these bars. Okay. And why do we have red bars and green bars? Well, a move could be up or down, right? We're really looking at the magnitude of the move, but it could be up or down. So we're displaying if it was up green, down red, in case there was some kind of a pattern or trend that we could visually spot. But these are the different moves, and this dotted line is the average, absolute average. If we converted all these moves to positive absolute values and took the average, that's this dotted line. So that's 9.7%. The high move was 35.1%, probably this one to the downside. It moved as almost unchanged. So you could see it could possibly be unchanged by the end of the day, or could have a very big move, and the median move is 7.8%. Now, the takeaway from there is, so right now the options are implying 8.1%. And if we're looking at this data, the takeaway here is that, look, even though, on average, we've seen 9.7% moves, the moves are, all over. There's no consistency here, right? There's no, like, these moves aren't like stationary from one move to the next. We don't see like 9.7, 9.7. There's a big standard deviation. There's a big variability from quarter to quarter. We've seen big moves, small moves. We've seen, small moves followed by big moves. We've seen, bigger moves, small followed by smaller moves. So it's here, what we're looking at is that, it could be volatile, could not be volatile. The ranges are wide. That's data, right? That's yeah.
Rob's just asking, and I'm sorry about the delay. Trading cards show an edge on the straddle. Is this the same as the discount Dimitri is talking about?
So all right, I'll move off this to this. Okay. I'm going to come back to this.
All right.
So on the trade ideas, right? So what we're looking at is, I think Rob mentioned the straddle. So the long straddle, right here, this is looking at the current straddle price. So these are the option prices, right? And then it's comparing that to historically, what did the stock tend to do, right? So how did the stock tend to move up or down? And it's creating a theoretical value of this straddle based on those moves, right? So if we took the average of, like I was just showing you the average of those moves, then on average, this straddle historically was 52.06, right? So that's the average. But what do we know is that we looked at that graph and we've seen big moves, small moves, average. So the average could get pulled up, right? It could get pulled up because we had a 35% move in there in our data alone, right? We saw that. So even though we have this average, what we want to do is see, like, well, what percentile, right? 39.5%, whatever that, what percentile is it? How often did, this straddle would have been profitable? How often was the move large enough to cover that straddle and be profitable, right? So that's this 54%. 54% historically, the stock moved by a big enough percentage for this straddle to be profitable, right? So let's go back to that, right? Let's go back to the earnings. And I was on here, 9.7. So here it is, we're over here, 8.1%. So what that trade card was converting the percentages to dollar value, because a lot of times for people it's easier to look at the dollar values because the options are quoted in not percentage terms, but in dollar values. Okay. So here, we talked about the average, the max up, down, median move, right? And we see that there's a lot of variability in the distribution of these returns. These are the simple returns, and the simple returns kind of just gives us a indicator if it was leaning more bullish or bearish. Best up move, down move, median, move. And these are the percentage of moves that are up versus down. So what we could do is say, okay, what if we're interested to say, because there's a lot of variability, right? There are a lot of, we see moves below the line, above the line. This is 8.1. So we want to know, well, because there's a lot of variability, we wanted to know, well, how many moves, were above, how many moves were below 8.1%. And this is what this IV rank is. How many were below? Okay, so if we enter 8.1% and calculate it in our data set, so this is looking at all, I didn't filter anything. I didn't filter number of years, quarters, nothing, just all the way going back 10 years. So going back 10 years, 50% of the actual moves were below 8.1%, 50% were above. So that's so now we're going and analyzing the data more and more, right? So let's say today, if the straddle ends up at 9.1%, and I don't know where it is, I'm just for demonstration, I'm making up a number. I'm going to calculate that. Well, now it's saying 58% of the moves were below, right? So as we go higher, the more moves below. So, let's say if the straddle came out 15%, well, 75% of the actual moves were less than 15%. Okay, so the calculator just helping you along the way to come up with like a percentile. Let's say we did just fourth quarter. So fourth quarter, 60% of the moves were below 15. So let's do the 8.1. 8.1. So 40% of the moves, 40% of these historical moves were below 8.1%. 60% of the moves were above. So you can see, a lot of these were above this 8.1%, right? Not above this line, above this 8.1%. So this one would count also above. All right. And so we don't have, we're running out of time. I don't have enough to go to the other places. But what we do is number one, we looked at the straddle, and if we're looking at the run up in implied volatilities up to the, we evaluated the straddle prices. Then we looked at the straddle value and compared that to historical actual moves in the stock. And we did it from a couple different perspectives. So I'm going to end right there, Will, because we're right up at.
Yeah, that was awesome, Drew. Super helpful. Interesting to look at an earnings that's going to take place after the close today. Great job, my friend.
All right, everyone, thanks for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Yeah, great question, Rob. Thanks.